We've got Kranthi Bathini, equity strategist, Wealthmills Securities, joining us this morning for his expert opinion. Kranthi, good morning. Pleasure having you back here with us on News9. What's the mood of the market? It is looking healthy. A second consecutive day of gains recorded, at least as far as the first 10 minutes or so of trading go.
Good morning to you. We are witnessing a complete recovery, a broad-based recovery in the market thanks to the de-escalations in the Middle East. But there are still some kind of doubts, but still the markets are rallying at this point of time. Nobody is effort to extend the war further and also escalate further. That's what the mood of the market at this point of time. We're seeing a complete cool off in the crude oil prices. That's where the Asian markets are taking the positivity, and in line with the Asian markets, Indian markets are rallying at this point of time. We are back at the positive zone. If we could move the Nifty further to 24,500, we can see markets are decisively in a positive zone in the medium to short term. That's where the market is taking the cues. But the crude oil price downtrend and crude oil price softening is a big relief to the Indian markets, and that's what the optimism we are witnessing on Indian stock markets this morning.
Absolutely. Well, you say softening of crude oil prices, but remember, Kranthi, they're still about 50% higher than what they were at the start of the year. In fact, oil was trading on the 2nd of Jan at levels of about $60 per barrel, and last closing on the Brent suggests about $94, $95 or so. So while prices have softened, I agree with you, they're still much higher than what India had become accustomed to.
Absolutely, Kartik. You're absolutely correct. If we compare the 3 months averages and all, absolutely the oil prices in the recent past they touch it to the range of 119.50 per barrel. And in fact, the forecast, if these escalations are going to continue, and there is a forecast of oil touching to 140 $50 per barrel, which is going to be a disastrous situation for Indian economy is concerned. Our current account deficit is going to ballooning, and also the inflation is going to be a key concern for Indian market. But markets are taking this relief because the crude oil prices are in a downtrend. If the war is going to de-escalate in the next coming weeks further, and if the peace talks concludes in a positive way, the crude oil is expected to be coming back to the range of around 65 to $70 per barrel. That's where India is going to take the advantage. And the markets are always forward-looking animals. They're trying to discount the coming downtrend in the crude oil prices in the medium to short term.
Absolutely. I'm sure anybody listening to you would be hoping that that price of $65 a barrel comes really soon. Meanwhile, oil marketing companies are reporting losses of as high as about 18 rupees a litre on petrol and 35 rupees per litre on diesel. Now, with the election season already on and counting expected to end on the 29th of April, are you foreseeing some sort of a sudden spike in retail prices of petrol and diesel?
Yeah, Karthik. Post-election, we can see some kind of a tinkering. I'm not sure how much the ferocity, how much the increase can be, but definitely there can be some kind of a tinkering towards the increase of the petrol and diesel prices in the retail market. That cannot be avoidable for the government, given the kind of last 1 month, the spike in the crude oil prices are concerned.
Let's now move on to IT stocks. And of course, this is some of the stocks like Wipro are likely to announce their quarterly earnings today. TCS already announced its Q4 results last week. And we are seeing some sort of a sentimental sort of uptick in IT stocks. Part of it, I assume, is linked to what we saw on Wall Street. But beyond that, we are looking at Wipro also in the green territory this morning. Now, does this indicate that the market is a little bullish on AI not having been as much of a disruptor in the last financial year as it was made out to be?
Yeah, Karthik, last few days due to the war, the AI discussions came down at the discussion tables. Everything is hijacked by the geopolitics in the markets. But given the kind of the strong foothold the Indian IT companies have, and the roller coaster ride these stocks are witnessed in the last 1 year, the stocks are nearing to the long-term averages. So as a contrarian buy, some kind of a bottom fishing we are witnessing in IT packs are concerned at this point of time. But the crux is how these companies are adaptable. And we witnessed the announcement of the TCS, how they are developing their AI teams are concerned going ahead. So by and large, how these companies are positioned to change their business models, change their upskilling their employees towards the AI. That is the crux. But given the kind of the current structure of the market is concerned, we are witnessing some kind of a bottom fishing in IT stocks. At this point of time, we are witnessing a broad-based rally in the market. So that's how this broad-based rally is giving optimism and some kind of a positivity for towards the IT sector also.
Right. And the last time we spoke, Kranthi, you were saying one of the relatively more insulated sectors would be the health services sector. And today is a good day potentially to look at that space because we are seeing some sort of a dip in Apollo Hospitals and also Fortis. Would this be a good correction to buy into these relatively unimpacted stocks with all that is happening in the world of energy markets and, of course, the conflict in West Asia?
Yeah, we are witnessing some kind of a profit booking in the sector today, Kartik. But given the kind of the long-term opportunity for these companies are concerned, one can add on dips. The healthcare chains are concerned who have a pan-India presence. Still, these stocks can give decent returns in these kind of volatile markets.
All right, Kranthi, Bathini, let's leave it at that for this morning. As always, pleasure having you here with us on News 9,
Thank you,
and thank you so
Kartik.
much for your time.